Welcome back to another episode of Profitless on Purpose, the nonprofit accounting podcast. And I'm one of your hosts, AJ Wheeler. And with me, as always, is Tony Cahigas.
Hey.
And Mark Pallardy.
How's it going?
Great episode this week. We have an article called Balance of Friction and Data and Getting Donors. And this is actually kind of like essentially what happens when you get anonymous donors, essentially, especially Bitcoin or kind of any kind of cryptocurrency. So we have a really interesting dive into that. And then we have an article, 9 tips from an expert fundraiser to help donors invest in their passion. So we'll talk about kind of his tips. Are there 9? There's probably only really 8, to be honest, but we'll talk about it and whether or not we agree. And then we have an article called Don't Rebuild, Upbuild. An interesting article written by somebody that we'll talk about in depth that may or may not have a good idea of how to reorganize the nonprofit landscape. But we'll talk about it. An interesting article to discuss. And then for our topic this week is what are in-kind donations, and can you record a free rent as revenue or a donation in your nonprofit? We get into a long discussion about what in-kind donations are, how to record them, what they aren't, and we'll talk about all that today. Anyway, Mark, do you have our first article for us?
You bet, AJ. First article up today is called The Balance of Friction and Data in Getting Donors. This is from Austin Detweiler over at Philanthropy Daily. And this is a kind of a different article talking about essentially cryptocurrency and thinking about new and digital ways of bringing in donors and bringing in donors with different requirements and different needs. And this article is advocating strongly for adding cryptocurrency options to your website. Now, that's scary for a lot of people. That's scary. Cryptocurrency is still kind of the great unknown. And this article lays out that it's kind of there's a friction between valuing data from donors versus anonymity, right? And so nonprofits frequently get anonymous donations, but how do you feel as a nonprofit getting an anonymous donation via cryptocurrency and not knowing anything about the donor, right? So this article posits that every time you ask your donor for more information, an address, an email address, all these sorts of pieces, you're encroaching more and more on what their, privacy is. And, he talks about that you can have a gift from a donor come in anonymously. And he's seen this happen in a number of cases where it's a very large donation, but then you can never go back to the well again, right? Maybe this is somebody who liked a program you were doing and just wants to donate, but doesn't want all the follow-up, doesn't want all the stuff that comes from a nonprofit. I mean, I know personally, I think I've mentioned on the podcast before, I donated to a friend's charity and I can't get off their mailing list to save my life. So if there were options to donate anonymously where you could say, it's just a one-time gift, I'm just giving this to you, please don't contact me again. Cryptocurrency seems to be a way to do that. I mean, and really lock it down because cryptocurrency is very, very private. One of the things when people push back and say, well, I want that data. And he says, well, you can always run a data append later and add to it with their addresses and names. Well, not really, right? Nobody's really running data stuff after the fact to try to add on information. Usually you're trying to get information on your donors up front, because especially with cryptocurrency, it's anonymized and there's no real way to get at the information. So I think it's an interesting way to look at anonymous donations and keeping them really anonymous, but there are other pieces to this puzzle that can be trickier, right? Because if we're not just talking about a goodwill 501c3, but we're starting to talk about organizations that are organized as a nonprofit, but might be a little bit more suspect or more politically leaning one way or another, et cetera, and you have anonymous donations coming in to fund a particular way of life or to basically speak out against another organization by donating anonymously, you could have some big money people coming in that have no transparency as to where their money is going or, what they stand for. So, it's that mix between privacy and transparency. And I'm curious what you guys think.
Yeah, I think. Sorry. Go ahead, Tony. Go ahead.
So, I guess I'm a little old school because I don't know much about this cryptocurrency whatsoever. But I think most nonprofits, especially smaller ones, they want as much data as they can to get information on potential donors. A lot of them have these mailing lists, so on and so forth. So they'll go ahead and deal with the friction as far as that's concerned. As far as the anonymous donors, I believe the article mentioned that if these organizations really wanted the donors' information to put them on a mailing list or whatever, I think they can pay a fee. I might be mistaken about that, but I'm pretty sure I saw that in the article. To Mark's point, most people who donate anonymously want to remain anonymously, but I thought it was interesting in the fact that with this cryptocurrency, there's and this technology, there's so many different ways to get donations these days. But I thought it was an interesting article.
One thing I thought was, well, a couple things. I think Tony's point that, like a lot of these old school donors, there's a lot of people out there that, or even old school NPOs, nonprofits, don't really realize what Bitcoins are. But like it or not, I think cryptocurrency is here to stay in some manner or fashion going forward. So I would say, let's get comfortable at least with looking at it from maybe like a nonprofit standpoint, because you never want to turn down money. You never want to turn down a donation just because you don't have a vehicle to accept it in. I would say the article also doesn't touch upon like kind of reporting requirements. Mark kind of touched upon it, but reporting requirements, whether like essentially the IRS has weighed in on like the super PACs, which falls underneath, the 501 designation, I think, but a political kind of organization that would have to report donations or substantial donations. It's not just held to political. When you're filling out your 990, if you have to do a full 990, you have to, essentially show everybody over a certain revenue threshold or a dollar threshold, depending on which metrics you decide to use. And it can make it really sticky. We had an organization that I was preparing a 990 for when I was in public accounting that did not want to give their donor information to us because they felt it was confidential. And, it's trying to wrangle it out of them as telling them it's a requirement. But what do you do if you're a nonprofit and you receive a $10,000 anonymous check in the mail or, like a cashier's check? It's not like you're not going to cash that, but there's a reporting requirement around that. And often you have to just put it in as anonymous. But I would say work with your tax professional on that for filing the 990 portion. But the other side of this is how to handle if you're taking these, say you receive Bitcoin as a donation. How do you handle that when that comes in? Let's say you make the leap to actually taking cryptocurrency. What's the strategy for managing that? Do you keep it in there and maybe like play the market on this donation? I would say that like the advice that I've given over the years is this would ring true for Bitcoin or stock donations. And stock donations are made and have been made for 50, 60 years to nonprofits. And the thought behind a stock donation is you have some kind of stock brokerage account where you can accept this stock donation, but you immediately or at the earliest convenience make the shift from stock to cash, where you sell it, you take out all the fees, and then you kind of have a cash equivalent of what that donation is. The longer you leave it in this investment vehicle, whether it's Bitcoin, Ethereum, some kind of cryptocurrency, or a stock market, you run the risk of having to report, like the gains and losses and the investment income and yada, yada. So I think that's one thing to think about when you're thinking about whether or not you want to accept stock donation, anything that has this capital market kind of thing to it, where it's a stock or a crypto donation. It's not just the anonymity, but it's how you process it into real, dollars and cents that you can be used by the nonprofit.
Interesting though, AJ. I'm going to jump in here because with stock donations, it's a little trickier because you know who the donor is, right? So the gain and loss recording, if you don't hit it right away, right? If somebody donates X number of dollars in stock and then the value drops precipitously, what do you record the loss? Do they record the loss? How are you managing that? And generally the nonprofit is going to record the loss, but at the same time, you don't have to deal with that with cryptocurrency because it's anonymous. There is no donor to kind of figure all these pieces out with. So it actually might be a more viable option for a nonprofit to keep it in the cryptocurrency if they think it's going to increase. But then if you're playing the market, are you subject to UBIT because you're trying to earn money off of income off of gains as opposed to on a vehicle? I don't know. I mean, I guess earnings on stock isn't really UBIT, but you know what I'm saying. It's but I don't know. It's a sticky situation, and I like that this article actually gives you a practical way of doing this. If you just start accepting cryptocurrency, you can actually just put a what the hell are they called?
A wallet.
A wallet or one of those tags on your website that you can just scan, and all of a sudden you just are flush with cryptocurrency cash. So I think it's coming. I think AJ, you're right. I think Bitcoin is here to stay. So how you're going to want to treat it, you're going to want to have a policy in place for that. And the idea that this article brings up of having less friction between an organization and their donors, right? Like having them fill out less forms or getting less communication. Some people prefer that. So,
and I think let's be realistic too about like discussing this. I think puts pressure on legislation or IRS or the FASB to make a pronouncement on how this stuff is handled. Often these kind of things for nonprofits are thought of way later. It's always, especially from the IRS standpoint, it's always, like for profit. They've made pronouncements in the IRS about cryptocurrency, how it's handled, reporting it, but nothing's been said from the IRS from a 990 standpoint, to the best of my knowledge, on recording or how to handle these invest or Bitcoin donations. So I think the important takeaway, I think, from this is the nonprofit community and the business community, to a certain extent, need to continue speaking about these things to be able to understand, so that there's some kind of, the questions are laid out there, I think. And I think we've laid out some good questions here to what's acceptable, what's kind of like open for interpretation in these. Tony, you got our next article for us?
Yes, I do. It's titled 9 Tips from an Expert Fundraiser, Help Donors Invest in Their Passion. And this is written by a Harvard Business School professor, Warren McFarlane. So I'll jump right into the tips. So the first tip is it's almost always impossible to insult someone by asking too much. Number 2 was if you ask too low, you may leave money on the table, which makes a lot of sense. Tip number 3 was a lot of times inexperienced solicitors may ask for actually less than what they were instructed to. The 4th tip was, unfortunately, even worse. Sometimes people will ask for more than they did. Sometimes they'll actually lie about it. The 5th tip was approaching someone with the right mindset. Perhaps make sure that you're prepared. You're not begging, you're actually offering an unusual or attractive opportunity for a prospective donor to actually invest in their passion and to help your organization out. The 6th tip was to start your work as an asker with a known, easy prospect, meaning build up your confidence. If this is going to be your first, time asking somebody for a donation, perhaps it could be something easy so you can build up that confidence. The 7th point was for major solicitations where you're asking for large sums of money, to prepare a detailed actual report where sometimes prospective donors, they have certain preferences that are really important for askers to understand. So it's to know who you're speaking to and who you're soliciting. The 8th point is don't wait too long for your visits, meaning when you have to ask some prospective donor, don't wait too long to ask them, only for the fact that sometimes psychological hurdles can get into your mind and it can sometimes hinder you. And the 9th and final tip was to develop a short, which just makes sense, develop a short customized pitch in advance of your first meeting with the donor. Because you need to build interest and to get them on the hook fairly quickly. So in summary, the author states that, your job is not of a beggar, but it's rather to educate the donor and to let them know how they can personally impact your organization.
I thought this was an interesting article to read because I think it reiterates something that we've talked about in the podcast before, is that essentially, don't forget to make the ask. But I guess my one beef with the article, or I guess, the thing that I kind of take issue with, is it's really talking about this ask for money. And I think the author kind of shows in his summary there, really shows, I think, the heart of the matter. You're not just asking for money, but rather you're an educator to the donors of what your organization is doing. This is different than trying to sell somebody, door to door, a vacuum cleaner or something like that. This isn't it follows very closely with sales, but I think it's much more, somebody that's working in the fundraising department or development department of an organization or a nonprofit. Really, it's not just it's not as salesy, I guess, as the first tips or the tips that this book lays out. I think it's much more of an education role and a communication role and a relationship role with donors and funders, as opposed to just a straight handout for money, making the ask. Yes, making the ask is a part of this, but I think what really drove home for me in the article was having information of the impact of your nonprofit and being able to provide that to potential donors is key, I think, for me at least.
Yeah, I think there's some good points here. It feels like an old school article. It doesn't really take into account some of the modern trappings of nonprofits. I think we've seen better articles in this sphere that have approached kind of how to ask for money. And I think AJ pinpointed some of these. Tip number 4 isn't really a tip. So I think this guy needs to learn what tips are. So, if you're going to put out 9 tips, at least have all 9 of them be tips. People will say they asked for more than they did. That's not a tip. That's saying people are lying to you. So anyway, that bugged me, but I'm a nitpick, right? So can't please everybody. But this guy has been doing this for 40 years. I'm sure his strategies work, and I'm sure his appeals work for people. And there are some good information here, but I'm not going to go out and buy this book he's trying to sell. So I think our third article comes from HA today.
Oh boy, strap in for this one, boys. So it's called it's coming from Nonprofit Quarterly. Don't rebuild, upbuild. Reimagining nonprofit infrastructure. So I got to be honest. When I first proposed this article to do on the podcast, I read through it, and I read through the first kind of paragraph or two on what upbuilding means. So I'll give you kind of the lay of the land here on what she's describing as what upbuilding means. Upbuilding, she talks about like a hurricane hits somewhere and houses are destroyed. Rebuilding would be rebuilding the houses, fixing what's damaged. Upbuilding is making sure that those buildings are, like not laying in flood areas, producing like hurricane, like retrofitting the houses to make sure that they're hurricane proof, and making sure that the people living in those low-lying areas are, like in a better housing position if this ever happens again. So what they talk about is, I guess, here's the tag: upbuilding what happens when infrastructure is defined expansively, centering humans and communities, and with a strong equity and an anti-oppressive lens is how she tags it. So essentially what she's proposing in a nonprofit sense is that during, if you need to rebuild the organization, or during, the pandemic or the post-pandemic kind of where we're in now, or the coming out of it, is that she wants you to take a look at the infrastructure of your nonprofit and see how you can upbuild it to make it, essentially more equitable, to try and weed out any kind of roadblocks that happen in there for, upward mobility of everybody in the organization, not just a select few. So I would say I agree with, essentially her premise there, because I think a lot of times from a nonprofit, and not to get too far in the weeds for me with what she's talking about in relation to like social justice or the equity portion of her article, but essentially making sure that your organization has the mechanisms for people to feel heard, understood, and making sure that they feel a valued part of the organization, I think is worthwhile work in any place of work, whether it be a nonprofit or a for-profit. She also talks about in the article what you do after upbuilding. So I guess I bring forward this article because I thought it was an interesting take, I guess, on reimagining or relooking at something during, a kind of transitional phase, and kind of the author's unique take on what this upbuilding means. So I kind of like to get your guys' take. Did you guys take anything out of the article that you thought was meaningful, or is there anything maybe you might disagree with or agree with strongly in that? Because I'd implore our readers to read it, because I think it's an interesting read, regardless of what side of the fence you fall on that.
Yes, I'll comment first, and I'll make this short and sweet, because I'm sure my friend Mr. Mark has quite a bit to say, which will be very entertaining. The article started out, fine. Like AJ said, the example about, rebuilding your house after a hurricane, blah, blah, blah. And then it just got, I don't know, political, or maybe this author had an axe to grind, or she had an issue with something. Maybe they need to see a therapist. But they mentioned the disconnect between board of directors and their staff, and they don't think that the author thinks they should do away with board of directors, and that the board of directors are mostly white, which I cannot believe that. I have seen nothing to that effect. She talks a lot about oppression and racism. So, I understand the whole concept of when something needs to be corrected or fixed, you don't want to go back to your normal. You want to, repurpose it to be even better than it was before. But this was an interesting article. Mark, what say you?
Yeah, I'm going to echo some of your points there, Tony. I think she has good intentions here. And I like the idea of building back, upbuilding, if you will, better than it was before, right? And creating something better than before. But the author's take on this is so narrowly focused. It seems like she has specific nonprofits in mind. I'm gonna kind of riff off of what Tony was saying with this corporation stuff, because I highlighted a few things that just puzzled me, right? Where she's like, the only reason that we have board of directors is because the IRS says we have to by the 501c3 rules. But it's like, which came first, the chicken or the egg, right? It's like there were probably board of directors or ways of organizing things, and then the IRS wrote the rules. It doesn't feel like she's done her homework on the actual history of why there are board of directors or what works with a board of directors, right? Yeah, they're supposed to have oversight. We've talked about boards ad nauseum on here, but she just wants to kind of do away with them wholesale and then create all these nonprofits that are mutual aid societies. Well, yeah, let's all hold hands and sing Kumbaya. But there are nonprofits that do vastly different things. And there are nonprofits that have opposing point of views on things. And that's part of the beauty of a nonprofit, is that you can hold a specific mission, vision, and value, and you may still be able to complete that. And you don't have to all get together and agree on everything. So, this kind of forced equity is what it feels like. And I would imagine, I'll counter Tony a little bit, because I would imagine most boards of directors are white males. I've been on some. When I worked at the museum, it was definitely the case that they had to purposely try to get more representation that was representative of the society at large, and that's great. I'm all for including people of all different stripes, genders, creeds, etc., onto different boards that are representative of the populace that they're serving, because that's really, really important. And I don't think the solution is let's dump the board and let's all become mutual aid societies. It's like, it's not realistic, first of all, right? How are you going to get from here to there? We have a very complicated and complex structure for nonprofits in place right now. Sure, we can make incremental changes, but just kind of saying, well, let's just throw the whole thing out and build better. It's like, it feels naive to me.
I couldn't agree more, Mark. And I highlighted another part of the article that I thought was, and again, I think it speaks to this, the author of this being, I guess, more of an activist or like an academic, I think, than coming from like kind of an equity, diversity, and inclusion kind of lens, than really understanding the inner workings of how a nonprofit is structured and worked. Mark touched on the board, but one thing down here, she says, right below where she says, why do we need boards? Because it's basically corporation law. Well, right below that, she essentially says that, like you're risking, do you risk the philanthropic dollars? Maybe not, but even if it's at risk, then philanthropy itself should change. The tax code should change. Revise the tax code to ensure that donors get tax breaks when they give to people directly, to collectives, and to mutual aid societies. Well, what she's not realizing is that is a slippery slope. One of the reasons why, okay, so let's take, for instance, the tax, like this, first of all, wouldn't be passed in a million years. But if it was, let's take a look at her solution to essentially, like giving a tax break to donating to people directly. Okay, so now you're talking about, if I don't want to pay taxes, I'm an ultra rich, whatever she sees as the problem, right? Ultra rich white male, right? And I don't want to pay taxes on $1 million. So I give a donation to my son. That way, what she's proposing is exactly why the tax law is written the way it is, so that you don't obscure high wealth individuals from moving money around being untaxable as a donation.
We'll even set up a GoFundMe for your son, AJ, so that we can give to him legitimately.
Right. It's like, I really think I understand where she's coming from, and I sympathize with the fact that, like, I think there needs to be more representation, by every group. And I think also there needs to be representation and difference of opinions and backgrounds, and not just the, kind of outward appearance of somebody in an organization. I think hearing from more sides gives you better ideas that you may not think of. And I welcome that at any kind of thing. But I guess the answer of burning everything down and removing boards and like flipping the tax code on its head, I don't think she really realizes what a board does and what the tax code is there to do. A board is there for oversight. And if you throw them out, who's going to make sure that these organizations aren't just taking the money and using it for whatever they see fit? A board is supposed to be an oversight of the organization.
Right. And how do you define what a mutual aid society is? What are you aiding, and which group are you aiding? And everything could be considered mutual aid. It's like, you start blurring the lines of for-profit and nonprofit, and it's meaningless. And it's like, it almost feels like it's like, let's just get to the socialist world where none of us are paying taxes and we're all just holding hands. And I'm an accountant. I get it, right? I also live in Portland, fairly liberal city, very liberal. And I don't mind that, right? There's definitely room for equity and inclusion. but dumping the whole society and let's start fresh. All right, well, it's nice for an article, but call me when the shuttle lands.
I think realistically, it. I think it's really rose-colored glasses and really like an activist kind of dream, And I use that word because she's used it in here about activists kind of run organizations, and I really think it's a very short-sighted. She hasn't really thought these solutions out, because I think the solutions she's proposing really provide more problems than currently she's trying to solve. I think there's easier ways to get around representation and better upward mobility of people in an organization than to dump the board and make the tax code so that you get a break on helping individuals. So anyway, Tony, do you have our discussion topic this week on such a rousing final article?
Yes, I do. This will lighten it up a little bit. So this topic is concerning, can you record free rent as a donation? So the statement is, I know the landlord cannot write off rent as a charitable deduction, but can the nonprofit record the free rent as an in-kind donation? And they would like some answers. And also maybe somebody can explain what an in-kind donation is.
Yeah, let me, I guess that's a good place to start, Tony, is I think defining what an in-kind donation is, because it's kind of a weird word, right? Like, isn't everything you give to a nonprofit in kind, like you're giving it because you're kind, but that's actually not what it means. It's what an in-kind donation is when somebody gives something other than money to a nonprofit. So let's say, I don't know, the local like Habitat for Humanity. I donate my old set of tools that I'm not using anymore, right? Or I go out and buy a new set of tools that I was going to use, and my wife bought a set at the same time, and I'm like, what am I going to do with two sets of tools? So I go and donate. Hey, Habitat for Humanity, can you use these tools? And I go and give them physical goods, not money, but physical goods. That's what's considered an in-kind donation. So I think it's good to touch on what's not an in-kind donation. An in-kind donation does not include volunteer hours unless that volunteer is a professional that you would normally pay a fee for the services that they rendered. So what does that mean? If somebody volunteers to dig a ditch for your Habitat for Humanity organization, or they come and swing a hammer as a volunteer to build a house, that's not an in-kind donation. Those are just volunteer hours. And if you want to record those, you need to report those in your annual report as like hours worked. But you can't essentially use a one-to-one, what you would pay a construction person to come swing a hammer for an hour. Let's take the same example and say that, like one of the houses built, the porch fell down and you're getting sued, the organization getting sued. And you have a lawyer on the board that decides to represent the case for free. His hours spent would have to be paid whether or not he was giving them for free or not, meaning you would have to hire a lawyer anyway to defend that case. He's a professional service that you would normally provide, that you would normally pay for his services. So you would.
But AJ, devil's advocate, comes in.
You're right.
You're saying that the tax code is valuing a lawyer's time more than a ditch digger's time? That doesn't seem quite right.
It may not seem right or equitable for to use the words of our last article, but that's the way the IRS code is written. So yes, it's true. They don't value the ditch digger over the lawyer, but it is defined that way. So volunteer hours in any way are not recorded. But if you're volunteer, save your hours and miles, you might get a tax break on them for your personal taxes. But anyway, that's a discussion for another day. But I think it's important to understand what the in-kind donation, back to the question that the author had, whether or not you can record rent as an in-kind donation. And the answer is absolutely, and you should. And then I guess the question is how you record it. So what does an in-kind donation look like in debits and credits when entered into an accounting system? So Mark, do you kind of want to explain the nuts and bolts behind how to record an in-kind donation and maybe some peculiarities around rent in particular?
Sure. And we're talking just on the charity side at this moment. We'll talk about the landlord in a minute. But from the charity side, when they are recording, they're going to record the full rent at fair market value, but then they're going to set that with whatever their in-kind donation is. So they're going to record. So let's say fair market value is $2,000 a month for a space, but the landlord is being kind and giving it to you for $1,500 a month. So you as a charity can record that $1,500 that you're paying, but then you would record an additional $500 a month and as in-kind revenue, because this is, an in-kind expense, because you would offset the expense with in-kind revenue. AJ, have I totally borked that up?
No. You're good. You're good.
So basically on your GL, any in-kind gifts that you get that are legitimate in-kind gifts, you're going to record usually as its own separate GL line for end of year accounting purposes, so that you have basically your currency, your money that's come in, and then a separate line that's going to show in-kind. That isn't going to be real money going into the bank, but it is going to be counted as revenue for you as in donations.
And I think to highlight what Mark's talking about, when you receive in-kind donations, it's really a zero-sum game. You're essentially grossing up revenues to match what the fair market value is of the items that are given, or the services that are rendered, professional services that are rendered. You're grossing up income by that amount, but then you're also grossing up expenses. So it nets to a zero amount to the bottom line or to your net assets. So you just need to make sure they match. And I think if you're audited, I think it's often like there's two schools of thought on this, right? You're either classifying it as natural classification, using the example Mark did for like free or discounted rent. The question often arises, should I make like an in-kind expense? Of course, you're going to have the in-kind revenue line because you want to keep it separate from real money coming in. But the question often comes up in my clients or clients that I've audited in the past is, do we make a separate in-kind line, or do we put it into the natural classification of rent? You know, how does that work? And there's no right or wrong answer here. I think you can choose either. You know what I mean? I think I should preface it by saying with an asterisk there, depending on materiality, if you're being given, $100,000 worth of free rent every year, you might have to record that as a natural classification of rent, just due to the materiality swing of including it in an in-kind expense. But I think you're left with kind of an option here, whether or not you record it in natural classifications or you create like an expense line that's in-kind expenses. What I would say though is you probably need to at least track the expenses so that the auditor can make sure that you correctly recorded the same amount of expense as you did revenue, and you're not grossing up one way or another. And the other part is identifying and having backup for the fair market value of these things. So often, like, we talk about in-kind donations from like a clothing perspective. How do you do that? There's like actually IRS tables for the amount, how much a shirt is or something like that. But I've also seen like a Goodwill book donations of clothes by weight. So you weigh the bags of clothes that come in and you assign a weight per pound of those donations. So I think there's options here. I think the point I'm trying to make is get with some kind of accounting professional to understand, like the scheme behind how scheme might not be the right word, but the accounting treatment you're going to use and how you're going to value these items when they come in.
Hey, Mom, I'm going down to Goodwill and getting me 2 pounds of shirts today. Anyway, sorry, a little loopy today. But I do want to talk just about the treatment of the landlord in our previous case, because the landlord will often ask, okay, well, I gave them a $500 a month break on the rent. Do I get to deduct that as a charitable contribution? Spoiler alert, no, you do not, because you're not transferring property over to them. You're transferring something that isn't even a service. And the IRS, this question comes up enough that the IRS even has a ruling, which I looked up ahead of time, ruling 70-477, a contribution made to a charitable organization of the right to use property if it's less than the entire interest of the property. In other words, you're not giving the property away. You're just letting them use it for some period of time for a cheaper value. So that does not give rise to a deduction. So the landlord doing this out of the kindness of their own heart, that's what they get out of it. So just be aware, if you are a landlord, don't try to deduct that because it'll be denied eventually if you're ever audited. So there's that.
Yeah, I think really interesting. I had never considered it from the donor side. I work in auditing, so I was always concerned regarding the donation side, I guess, or the receiving side of in-kind donations. But it's interesting that there's actually a carve out for this free rent thing, because I imagine back in the day, the IRS probably came across somebody trying to get one over on them by giving away free rent, and then trying to deduct it as a charitable donation.
And if you're a nonprofit, you're frequently going to be asked by these people giving you in-kind stuff, oh, can I get a receipt for that, right? Where's my receipt so I can write this off on my taxes? So it is helpful, especially if you're in the development department, to know, what is deductible on a donor side, so that you can know if it's a true in-kind that you're giving out, or if it's something that is just charitable without anything else.
And we might want to mention fair market value. Determining fair market value on these in-kind donations, I think, is really important to touch upon. We used the example earlier of a lawyer maybe providing free pro bono legal work to a nonprofit. The easiest way is to ask them what they would normally charge. I mean, I know it sounds weird to ask somebody that's giving free services, but essentially you just let them know that you're required to record this as a revenue and expense, and you need to know what that donation is of their time is worth. So what would they charge a normal client per hour to do this? Clothing and like new equipment, and the kind of like the example I used earlier of donating tools to a Habitat for Humanity. The fair market value is what somebody would pay for that. So if it's brand new, you can use the receipt amount. Like in my example, I had 2 brand new tool sets that I had just bought, and my wife had bought me one and I bought the other. So it would be the receipt amount of the tool set. But if it's a used tool set, let's say I have a 2-year-old, used tool set that I'm trying to give over there, it can be a little more tricky. So I think taking a best stab at like what it would be new, and then maybe figuring out how many years of use on it is. I mean, it's tricky. So I'm just saying, do your due diligence. And I think the most important thing is to have support for it. How you determine that value, either by doing a Google search, using the IRS tables, asking for, an in-kind donation receipt of what that fair market value is. Having that on hand and being able to do that is much better than getting caught out in the cold, like, well, I don't have anything. I just recorded, a pair of shoes is $100 because they said Air Jordan on the side of them. It's like, it may or may not be worth that. You probably need something more than that. So
one thing I do want to mention though, AJ, luckily the IRS has not determined that the donor and the donee need to agree on an amount, right? Because that would be a nightmare if everything you got, right? Could you imagine Goodwill having to match up with all of the people who are giving clothes and saying, well, you're saying it's worth that, so I have to say it's worth that on my books. That's why when you go to Goodwill or another donation place, you're often given a receipt that isn't real, is just has an itemized list of some things, but has no dollar value on that, because they're leaving it up to the donor to figure that out. And the company gets to value it by the pound, like AJ was suggesting. So it's not oftentimes these fair market value things. They will ask to get a general guideline for their books, but I think the receipt that goes out often tends to be blank, so that it leaves it up to the donor to figure out their own portion, because what a nightmare scenario that would be, trying to match all that up.
And I think another good example of this is when you're getting donations for, like, let's say raffles, valuing those to make sure that you're completing that circle of what the fair market value is of somebody that like bid on an item or something like that. Or if you have like free giveaway stuff that you've received, as part of like a membership or something like that, making sure that that's included in like the fair market value or what somebody's receiving for an auction item or for a donation to a membership that has stuff attached to it. So,
I think raffles and auctions are a conversation that can be had all on its own. So we'll save that for a different day. And for today, we're going to wrap up another episode of Profitless on Purpose. We really appreciate you being with us. Please feel free to comment in the below if you're watching this on YouTube. Rate us on your favorite podcast app. And then, of course, we are reachable on Twitter at ProfitlessPod. We appreciate you joining us today on behalf of Tony Cahigas, AJ Wheeler, and myself. Thanks, everybody.
Thanks, everybody. Have a good week.
Thanks, y'all.